Welcome everybody. Thank you so much for joining our webinar today. We have a special guest host with PIMCO. Her name is Christina Pihos. She will join us here in a moment. Today's topic is unique challenges that women investors face. This is part of our 401k Plan Professionals webinar series. If you haven't met our team, there's a picture of our team up on the screen. I am the Director of Marketing. My name is Kristen Carlin. Just a little bit about our webinar series. We try to keep these under 30 minutes. There's a variety of topics, so not just 401k like you'll see today. We'll send out a recorded link here in about a week. And please feel free to share these with people. They're out on our YouTube channel, they're out on our website, and we just want to make sure that we can get as much education to participants and plan sponsors as possible. A little bit about Christina. She joins us from PIMCO. She lives in New York, works in New York. She has 2 kids and a husband. She's been in participant engagement for almost over 12 years and deals with plan participants and plan sponsors and helping them understand the complexities of financial education. So Christina, I'll let you take it from here.
Awesome. Thank you, Kristen. Hi, everyone, and thanks for joining me today to talk about some unique obstacles women face in retirement planning and some ideas on how to overcome those obstacles. So if you're a plan sponsor, you can apply to your women participants. If you're an advisor, you can apply to your women clients, or even just your own personal situation. Moving past the disclosures. So as head of PIMCO DC Participant Engagement, my job is really to build a personal relationship with my plan sponsor clients so that I can best help them achieve their plan goals. And if one of their plan goals is to target their women employees to help them save better, I always start with the idea of creating your messaging that can speak to assessing their own situation. So if I was working with an employee specifically on retirement planning, I would start by having a series of discussions of where they could teach me about them, about where they are today in their finances and where they want to be in terms of income or expenses or debt. I would also ask about short-term and long-term investing goals, including when you want to retire and what you want that retirement to look like. I'd also work with them to define how much they view investment risks and what type of investments they do or do not want to invest in. But given our setting today, I can't really do that with you one-on-one. What I can do instead is review research findings on women investors in general as a proxy. So we have research on how much wealth women control, how women feel about investing and the financial industry, and how they approach retirement planning. So as I go through these findings, you'll hopefully hear and see things that speak to your situation and your views. But even if some or most of these findings don't really resonate with you, I hope that they'll give you a starting point to consider the importance of retirement planning and how it relates to women. So let's start by building a profile of women in general when it comes to wealth. According to the US Census Bureau, 52% of US adult population is female. And based on that data from the National Center of Education Statistics, these women are serious about building their educational credentials. So, snapshot, women account for 57% of the bachelor degrees, 59% of the master's degrees, and half of the doctoral degrees awarded by US institutions. This education training has empowered women to become a more dominant force in the workplace. By 2015, women accounted for more than half of the country's labor market. And what I consider to be a very interesting trend, 2 out of 5 businesses are owned by women. So it's 40% of the businesses in the United States are owned by women. More working women has resulted in more women assuming the role of breadwinner in the household. Almost half of all employed women in the US say that they are their family's sole or primary earner. And that includes the 42% of women who have kids. Changes in how women are accessing education and participating in the workforce have contributed to a shift in who controls the private wealth in our country. In 2015, women surpassed men to control the majority of the US private wealth, giving women decision-making power over $14 trillion. And as impressive as that is, next year it's expected to grow to $22 trillion. And if we look at the bigger picture, women are in charge of $60 trillion worldwide, which translate into almost a third of the world's wealth. So, but how are they investing this money? PIMCO conducted some research in 2018 to find this out. It included 1,500 adults, both men and women, each of whom had $10,000 or more to invest, and described themselves as having sole or shared responsibility for financial decision-making in their household. The in-person and online research sought to understand women's views on money, investing, and the financial services industry. But what we're going to focus on today are the findings related on how women view and invest in their retirement planning. The key takeaway from our research is that while women represent an increasingly important segment of the investing population and they believe in the power of investing, many of them are not preparing for retirement. With the rest of our time today, I want to dig into the specific reasons driving this behavior and present strategies that could help women overcome obstacles and better prepare for retirement. In what I consider to be good news, women in general are ready to take responsibility for investing, and they believe investing is a powerful tool to create life choices, a sentiment I think everyone here can agree with. In more good news, the vast majority of women see investing as a way to meet long-term goals, and they are optimistic that investing can create the type of steady income they need during retirement. And as you can see on the right-hand screen, if you flip forward a little bit, Kristen, 9 out of 10 women believe that investing properly can help them get that retirement paycheck. But unfortunately, there's a flip side. Women aren't acting on those beliefs. In fact, only 17% of women rank retirement as their top money goal, with most of them instead prioritizing how they can use their money today. What drives this short-term focus? For many women, it comes down to, surprise, lack of time. Here are just a few of the things we heard from women when we asked why they aren't planning for retirement. Some of us, myself included, feel like we live in a perpetual state of burnout, like that last lady on the right. And as you all can understand better than anyone, women lead busy, demanding lives. In fact, half of women say they have so much on their plates today that they literally can't plan for tomorrow. The upshot is that women consider themselves more time poor than money poor, with more than 2/3 of women ranking the lack of time as their biggest life challenge, a number that jumps to 72% for women younger than 50. So time-starved women should consider a few things. The first off is an automatic investment plan. Yes, auto investing requires some time up front, setting it all up, but after that, a predetermined amount is taken from the bank account or paycheck at regular intervals and invested, leaving them free to focus on the other important things in their lives. An auto invest plan also offers valuable advantages, including helping you to adhere to a consistent investment program and dollar cost averaging. And as we all know, dollar cost averaging is where you invest a set amount of regular intervals at whatever the prevailing price is. When prices are low, you buy more shares. When prices are high, you buy less shares. But the whole idea is that over time, you average a better price than someone who tries to time the market. Obviously, there are no guarantees, but markets do regularly go up and down. It's impossible to accurately predict movements over the long run. Another strategy for time-starved women who work in the private sector is to take full advantage of the employer-sponsored retirement plan if one's offered. According to an analysis of Census Bureau data, almost 2/3 of private sector workers over the age of 22 work for a company that offers a retirement plan. The most common employer-sponsored plan is a 401k. This slide outlines some of the specifics about 401k plans, but the main takeaway for busy women is that the plans allow you to divert money from your paycheck before taxes to invest for retirement. And in many cases, your employer will match all or some portion of the contribution, making these plans both effective and efficient. Despite these advantages, only a small percentage of women say that they're actually maxing out the contributions. So it's important for women to have access to education resources so that they get a better understanding of the tools that are available to them. Another strategy to consider if you're strapped for time but still committed to investing for retirement is a target date fund. A target date fund offers a diversified portfolio of investments in a single fund that is adjusted over time as it moves toward a set year of retirement, the target date. So for example, an investor who wants to retire in 21 years might contribute to a 2040 target date fund. And as time passes, the fund's composition or asset allocation will change to reduce risk. This journey is referred to as the fund's glide path. There are no guarantees that these funds will succeed in their objective, but they're a convenient option to consider for those who feel that they are too busy to supervise their own portfolio. Here's my compliance disclaimer. The target date is the approximate date when the investors plan to start withdrawing their money, not when they retire, but when they start withdrawing their money. And the principal value of a target date fund is not guaranteed at any time, including at the target date. There is no guarantee that a diversified portfolio will enhance overall returns or outperform a non-diversified portfolio. Diversification does not protect against market risk. You should talk to an advisor or consultant about the pros and cons of a target date fund for your specific situation. So let's move away from time-starved theme and into lifestyles. This slide shows some of what we heard from women investors who are putting off long-term retirement planning to instead focus on improving their current lifestyle. Maybe some of these quotes capture how you feel about short versus long-term investing goals, but these opinions certainly showed up in our research. Overall, when discussing financial goals, women prioritize financial stability and the ability to meet short-term and long-term life goals over retirement. Unfortunately, retirement's not going away. Retirement planning isn't something that can't be put off. Retirement is likely the largest financial expense everyone will face, and women will enter the process with some unique challenges. So let's take a look at a few of those challenges. First up, women will struggle to accumulate as much as men in their lifetime income. It's just a reality. One reason is that women continue to earn less than men. Probably not news to any of you. According to the Economic Policy Institute, women currently earn 84 cents for every dollar a man earns. Over time, that difference adds up. Another consideration is that women, much more than men, are likely to interrupt their career for family obligations, whether that is taking care of young children or assisting elderly parents or something else. Those interruptions can further limit a woman's total earnings. And then lastly, women will likely need more retirement money than men because women generally live longer. They have a lot of time on their hands. The National Center for Health Statistics found that a male infant born in 2016 can expect to live roughly around age 76, but a female baby will live to age 81. Good news for sure, but also something to really think about when estimating how much you'll need to support yourself after you stop working. So now let's keep talking about time and how we can use it to help our planning. Time is one of the most valuable tools you have to overcome some of these obstacles. I understand how tempting it is to put off retirement planning when you have more immediate needs, but the sooner you get started, the longer your money has to grow. Even small contributions made regularly can grow to a substantial amount over time thanks to the power of compounding, which is where the money you have earned from interest and positive return increases your base. Consider the example here. We start with Anne, who at age 25 commits to investing $400 a month. Assuming Anne's investments earn an average annual return of 5%, which is pretty optimistic, by the time she was 65 and ready to retire, Anne would have more than $600,000. Now look at Tina. Tina puts off investing for retirement in favor of more immediate concerns like a vacation, house, other things like that, but things she can catch up by investing more when she actually does start investing for retirement. So at age 40, Tina commits to investing $800 a month, twice of what Anne did. But assuming the same 5% average annual return, Tina would only have roughly just a little over half of what Anne had when she started stop working at age 65. That's a big difference, and hopefully makes a compelling case to all of you to help others get started as soon as possible. Women who aren't planning for retirement also talk about how they're redefining success, taking the emphasis off that big number, that accumulating wealth number, in favor of setting and achieving life goals. No doubt these quotes resonate with many of you, and you probably won't be surprised to see these findings. I know personally my definition of success has changed over time and continues to change over time, thanks to things like family and kids. When researchers asked women to identify their top 3 personal goals, the number 1 goal, by far, was to improve their health and wellness. That was followed by travel or the opportunity to live abroad. The first financial goal on the list came in at number 3, with 35% of the women saying financial independence was a top goal. What it means is that women are prioritizing life goals over wealth goals. But in my mind, these things are too connected to think this way. And from my seat, I can tell you that investing is a means to achieving many of your life goals, particularly when it comes to retirement. So to me, women could use some guidance in thinking about these goals in partnership with each other rather than in competition, because you need financial longevity to support you as you live longer in a more satisfying life. The simple graphic is really meant to drive home the point that we all need substantial retirement assets to pay for our life goals. Wealth is an agent to living the retirement life we aspire to. I want to touch on just one more issue that we heard about when discussing why women aren't investing for retirement. And these quotes are all from women talking about the financial industry in general, including financial advisors. There's just a general frustration on how the system is set up. And here are some of the aggregated findings on how women view the investing process, with almost 3/4 of them saying the system is set up to be confusing, and half under the impression that they need to become experts before they can talk to an advisor, which when you say it out loud, it's very counterintuitive. Your advisors are meant to help educate you and guide you along your life's planning. So what are some things to consider when discussing these particular challenges? So let me start with concerns around advisors. There's no reason for you to work with anyone that doesn't treat you with respect and trust. You and your advisor are in a partnership, whether it's your personal advisor or it is the advisor helping you with your plans. The advisor may be the expert about the markets and investing, but you have the expertise in your own areas and you are the client. So do not settle when choosing an advisor. I highly recommend you ask your family, your friends, and your colleagues for referrals. When people are happy with their advisor, they are generally very willing to share their experiences. And in that same vein, I'd also suggest asking a prospective advisor if they have any references you can contact. And in what is maybe the most important advice I could give you on this topic, build a relationship with your advisor, whether it's a personal situation or a professional situation. Sharing information about your concerns and your goals could be what stands in the way of you achieving success for the both of you. The more your advisor understands your unique situation, the more he or she can help you. And remember, investing for retirement is a long journey. So you're going to be working with these people for a while. And then lastly, when it comes to investing, education, and becoming that expert before you reach out to advisor for help, I don't think it's in everyone's best interest or it's practically everyone's job to become an expert on everything investing. I imagine most of you already have more jobs than you can handle right now, but if you could feel more confident with a greater understanding of the financial markets and investment options, and there aren't any number of resources, you can tap for independent education. So a couple of resources that you can think about is most asset management firms like PIMCO have websites that offer an education section. This information may include a glossary of terms and either in written format or in video content to help you better understand and absorb a lot of the financial industry jargon and concepts that may be applicable to you. I would also encourage you to attend more in-person events like today. Check with your local library, community centers, any colleges or universities in your areas. There's often a schedule that includes a few financial topics. And then lastly, for the really ambitious people in the crowd, take a course. There's several industry organizations that offer online courses free of charge that can help, raise your education level when it comes to investing for retirement or just the financial industry in general. So with that, I hope you found today's session helpful and useful in how you approach women when it comes to investing for retirement. And now I can open it up and take any questions.
Great. And I did have one question come through. And the question is, you had mentioned that you do one-on-one kind of assessments for women. And how would you roll that up? How would you take that at like the plan participant level within an organization and educate that way?
Really good question. I get this a lot from a lot of my clients. When an organization is targeting women for whatever reason, maybe it's International Women's Day or, it's like National Planning for Retirement Week and you want to change up the curriculum a little bit, I highly suggest a couple of things. And these are general communication best practices. First one is make it event-based. Women are very social creatures by nature. So the more that you get them around people that are like them, as well as providing an industry expert or an expert around them to ask questions, this creates kind of the safe zone so that women can hear the topics, hear the advice, but also refer to their peers about their own life experiences so that they can get more comfortable with the content. So that's number one. Number two, this is an industry best practice for communications in general. In the financial industry, we like to talk a lot. We like to use big words, asset allocation, alpha, beta. Honestly, when breaking it down for participants or employees where finance is not their bread and butter, it's not their day job, you lose people very quickly. So for all of your communications, break it down very simply. Don't use jargon. When you say asset allocation, say, your stocks versus bond mix, and start bringing it down to a very simple level, a very normal speak level. Pretend you're having a conversation with a stranger that you met on the street, and the language that you use to describe what you do. That will help it resonate with your employees who have a lot of noise going around anyway. I mean, there's commercials about retirement. We see it on TV all the time. We see all the ads on Facebook. We have to break through that noise with very simple messaging. And if you're a plan sponsor or an employer, you have a very special opportunity in that you already own a channel of communication to your employees. And that's a real moment where you can drive simple messaging and get them more involved and more comfortable with the investments that you have available to them.
Great.
Does that make sense?
Yeah. And I have a question for you, Christina. We're talking about special challenges that women face. Have you guys done research on any unique challenges that men face?
It's funny. We get this question a lot with this research. So back to when we talk about that we surveyed 1,500 adults, we evenly split that between men and women. So right now, we were really specifically focusing this research and kind of, what our findings are and the challenges that women face. But right now, we're actually spending some time and figuring out, okay, let's take a look at the men's segment and see, are there any interesting findings or trends that are popping up from a male investor standpoint. So that there's more to come. We haven't gotten there yet, but that's definitely something on our radar.
Great. We'll have to have you back.
Awesome. I would love to.
Great. And just for everyone on the line, just some resources available. We have a YouTube channel. All of these videos and webinars that we've done throughout the last 2 years are on our website, on our YouTube channel. So please check them out. If you haven't subscribed, subscribe. You'll get a notification anytime there's a new one. And we just want to say thank you for joining, and thank you to Christina. We really appreciate you you joining us today. And we've got a next webinar coming up in November. We're going to have a fiduciary expert on, and Gina Buckles, one of our advisors, is going to interview him. So stay tuned, and thank you again.
Thank you, everyone.